I do really worry that we are going to wake up. House prices have taken off again. People who aren't on the ladder, it's just unaffordable.
Get frozen out for a little bit longer.
Frozen out for longer. I mean, the good news recently is that you can actually say, hand on heart, the property market has become a bit more affordable.
Yeah.
For the wrong reasons, but it's got more affordable.
Welcome to Checks and Balances, brought to you by Partners Life. I'm Michael Vincent. This is James Blair. And today we've got Jarrod Kerr, Chief Economist at Kiwibank, back for round two. We're here to talk about themes in the New Zealand economy going forward.
Okay, so Jarrod, welcome back to the podcast.
Thank you.
So if you haven't seen the previous episode, stop right now. Make sure to go check it out. We talk all things inflation and where we think lending rates are going moving forward. Jarrod, this is a really good one. There is a lot to talk about in terms of themes happening in New Zealand. Where do you want to start?
Outside New Zealand, how's that?
Yeah.
Well, we are a small island nation that does get impacted by everybody else, right? So logical place to go.
Yeah, absolutely. I think that with all the news that we get in New Zealand about how bad things are, I like looking at the data that turns the fastest.
Yep.
And you get that in a lot of surveys. So PMI surveys, ISM, all these acronyms out there. There are some great surveys to have a look at, and businesses tell you real quick what's happening. They've all turned in the last 6 to 9 months. You're not hearing about it here, but you look at the international data, it's gone from being quite negative to either less negative or actually positive. And there's some good data out there from the Dallas Fed in the United States that shows that global shipping and other things are picking up. So long story short, I'm a little bit more optimistic on the globe. And that means that as a small country with a massive export sector, we're gonna leverage off that growth.
Yeah, so at its simplest form, people are feeling more bullish overseas. They're potentially more willing to invest, do business. They look and go, you guys have some stuff you're selling. We're interested in buying that. Or we're turning around going, we would like some investment in some projects or infrastructure or whatever we might do, and opposed to just like anybody, right? Do you go in on that holiday? Do you buy that next property? Do you buy that investment property? A lot of countries, businesses are going, not sure what's going to happen. Globally, people are more open to doing business.
Yeah, and I think it's on the back of interest rates, which we've talked about in the last podcast, right? The ECB, European Central Bank, cut interest rates. The Bank of Canada cut interest rates. We've seen the Riksbank in Sweden cut interest rates. Swiss National Bank. The list is growing, and we're seeing more and more central banks cutting interest rates. Just about all of them will have cut by the end of this year, including the Reserve Bank. So this is a global move in interest rates lower, and it's going to be a global lift in economic activity into next year and beyond.
Yeah. Who do you think are kind of the first industries that will see the benefits of that turning kind of tide outside of New Zealand? Where's it going to trickle into first?
Yeah, that's a good question. I think the ones that have probably done it tough the most. So we're seeing these tourism industries picking up, but that's on the back of just getting out of COVID, and getting back to normal. But I think we'll see more into that space as people become more confident, and when they're more confident, they travel more. Retail's been hit hard. It's been savage for some retailers. I think that'll start to pick up next year as consumers find themselves with a bit more money in their wallet. Their pay is going up, their interest rates are going down. They'll spend more at the store. But then there's all the exciting stuff as well, like manufacturing and what we're good at in our agriculture, dairy and that sort of stuff, picking up on the back of stronger global demand. I mean, it's going to be, I think, a decent pickup next year.
And do you think we'll see any of that benefit in any of those industries noticeably this year, or we're really waiting till next year?
I think to be certain, I think it's a next year story. which is why we are still sort of saying this year's tough. This year will be better than last year because last year was miserable. But, I can't imagine people getting too excited over the outcomes they're likely to feel. Whereas 2025, it's going to be kind of like this. It'll take off next year, and so many things will start lining up. So interest rates will drop, and then expectations for house prices will pick up, and then that feeds through to so many other parts of the equation for businesses and households.
Yeah, just to change the tone. So I was a financial advisor for 10 years before I saw a market dip. I can't even remember what I had for breakfast, but I am just so ingrained in things being tough that I can barely even remember what it was like when things were good. Can you guys remember what it was like?
I came back in like COVID to work back in the finance industry here, and I was a broker for maybe like 6 months, and it was pretty hot. And then it wasn't a great place to be.
Yeah.
So I would love a bit more time in the sun, to be honest. Yeah.
What about you, Jarrod? Do you remember the good times?
I remember the good times. I remember starting at JP Morgan 2004 with these equity, stock market sales people. And I just used to laugh. I'd turn up, and every day that one of the main sales guys was like, just buy. I don't know why you're asking. Just buy. Buy everything. Buy it all and buy it now. And that was 2004, and that lasted all the way to 7, and then it became sell everything.
Yeah.
I remember some good times, and I remember we do get a bit irrational in the good times and the bad times.
Yeah.
We tend to over.
Yeah.
I'm looking forward to it. I just can't imagine. I understand, interest rates will probably go back to about 5%, but I'm just like, my life will be so good.
Yeah.
How good will things be?
I find it really interesting on the point of humans tend to overestimate, like how good it is or how bad it is. Because you remember peak 2021 where it was like, and we were just looking at the housing market. It was like, it didn't matter what it cost. It literally didn't care. Like whatever budget you had, you blew it, and it didn't matter. And it's that psychology of in 2 years it's going to be double the price, so it doesn't matter what I pay now. And I guess it's the same thing now, right? Everyone's like, this is terrible. There's no way I would go out and do something now because it's just going to get worse from here.
Yeah.
I got a book that you would love, and it was recommended to me.
If you say The Hungry Caterpillar, I'm going to throw you out of here.
Is that no. It's called Devil Take the Hindmost.
Oh, yeah.
Have a read of it. It's fun because it goes back and it looks at all these speculative bubbles.
Yeah.
Right back to the tulips and before that, and the East India Company.
Yeah, East India Trading Company. Yeah. And saffron.
It goes through it all to today, and we just do it over and over again.
Yeah, very short-sighted.
Yeah.
You mentioned in terms of retail spending being just like a very miserable place at the moment. I saw an article recently that retail spending is worse than the GFC and very similar to like the 1987 stock crash times. It's really hard in that retail space, isn't it?
I got a feel for them. Yeah, I got a feel for them. They've been hit by various things over the years, right? COVID hit them.
Yeah.
Right? They hit them hard. They came out of COVID. They were kind of worried, and then demand just went ballistic.
Yeah.
Right. And then we had customers scrambling to get stock. They got stock late. They missed Christmas. They missed various dates that obviously you want your Christmas stuff to arrive before.
The shipping
Christmas.
Container Index. Remember
exactly.
that? Yeah.
Remember that? And then they found themselves overstocked, and now they're destocking.
Yeah.
It's like they have just gone through horrendous. So, looking around personally, so many stores have got 70% off sales.
Yeah.
That's got to hurt.
Yeah.
And it's not one store, it is
rows
of stores.
You walk down this street, right? So we're on High Street in the middle of the city. You walk down High Street and you see all the vacancy signs where people were there and they're not there anymore.
Yeah.
You walk up Queen Street, like up the other side. it is a tough world to be in, and it is always, consumer demands are changing, things are always shifting.
Work from home. Right, work from home.
You imagine the lunch cafe, the impact that had from having pretty much 100% of people there every day to maybe you're rolling at 40% or 50% of people in the city on any one day.
Yeah, it's pretty tough.
Yeah. I also want to jump back to the international environment. The other thing you're talking about, there's all these countries that have already cut, that there's people ready to invest. The obvious question is, why are they ahead of us?
In cutting?
In cutting, in
predictions,
in terms of how they're feeling going forward. We are not in that space. We haven't cut, and we're still not feeling that good about life. Why are they already where we want to be?
I think on the broader thing, outlook, we're not too far. I think if you go back, the Reserve Bank took a lot of credit for being the first to start hiking. And we had a bit higher inflation going into all of this madness than other countries. So they're a little bit more sensitive to start with. They were 6 months ahead of the RBA. And then, most central banks started hiking around the middle of 23. So they actually got going quite a bit after us. Now we're sitting here. We thought that we'd be in a position where we'd be one of the first. As it turns out, we'll probably be one of the later ones. The data has turned globally of a similar nature to what we've seen here. The response functions are a little different. You were saying the US is really strong at the moment. Well, their rate cut expectations have been pushed back a little bit. We can argue over who's coming first, second, third, but all central banks have done this.
Okay.
And all central banks will be doing that next year.
Yeah.
Going down. So I think collectively the herd is pretty much going to move together. It's just who's at the front.
The cartel, not the No, it's I agree with that as well. So when that does shift, and the I guess the data changes, we start getting a bit of an uplift from those industries. What do you think that means for the labour market in New Zealand? Where is it at now? How do you see it over the next 3 months, 6 months, 12 months sort of thing?
Yeah, it's a really good question, and one where I think everything's playing out. So what's happening in the economy, gets reflected in that labour market, and, you get this unemployment rate or this wage rate that comes out. And those are the things that we spend a lot of time analysing and trying to figure out, because it can be a big difference between us forecasting unemployment going from 3 to 5.2, which is our actual forecast. The bank doesn't care too much about that. We'll put a little bit of money aside.
Yeah.
But where we get worried is if it goes to 6, 7, 8. So that is where it all plays out. So let's have a think about it. And there are parts where just in the last year things have improved dramatically for employers. There were a lot of jobs that were simply vacant, and you just couldn't find Kiwis to do those jobs. Well, we've imported a record number of migrants in the last year, about 140,000, which is massive net immigration, and they're filling those jobs.
Yeah.
So you look at the jobs that are being filled, and they're taking the ones that we were screaming for a year ago. So you ask businesses, how are you feeling on these different things, and they're saying that labour is no longer their number one concern. Actually, it's demand for our product or these other things. So labour, the tightness of the labour force has definitely eased. Wage rates are heading south, which is great from an employer's point of view. And the unemployment rate's lifting, but not to levels that we start getting overly concerned. So it's all playing out in the labour market. Beneath that surface, even still, migration is doing a big part of it. But we're losing a record number of Kiwis. Most of them go to Australia.
Yeah.
We train them up. We put them through university, and then we get what my professor told me when I left university: go to Australia.
Yeah. Get out of here.
And they go. It
Yep.
seems to be the Kiwi way. That's
Hopefully
not
they
new.
come back though. That's the hope,
I
right?
think if you're moving to Australia,
It's different.
you're far more likely to stay there than if you were, say, doing an OE in London.
In London or somewhere.
Or something like that,
Yeah.
right? Because you do your stint and you go, I've got a great job, I've been trained up, I go back to New Zealand or to Australia, and you come back arguably, better for the economy, more trade, more money, that sort of thing. But I do think that drain directly to Australia, much more hard to recoup.
Yeah.
Yeah.
Okay. When it comes, can we talk about the Wellington labor market at the moment? Because that's quite interesting.
Yeah. So we've had a change in government. They wanted to cut costs, and from what I've heard, both directly within government agencies in Wellington and indirectly through Kiwi bankers who deal with people in the region, is that this government didn't muck around. They didn't muck around. They came in and said, we want 7% or whatever it was, and we want it now. This is not a target to put on a whiteboard somewhere and you'll get there in 2 to 3 years. No, this is happening today. So there are, I haven't seen the latest numbers, but there's at least 2,000, maybe more people who've just lost their jobs almost instantly. So that's having an impact on the political capital of this country for sure. So we're sort of watching. The official unemployment rate in Wellington is still below Auckland's, but we're kind of thinking that it'll pop as those numbers feed through.
Yeah, because I mean, if you look at the Wellington property market, and maybe that's a nice segue to talk about property going forward, but Wellington's property market is in shambles, and Auckland's isn't a hell of a lot better, but it's
At
messy.
least we haven't resorted to the tender process yet.
Doesn't like tenders.
I still don't get it.
Yeah. You just put your best offer in the envelope, mate. Pretty straightforward. Let's talk about the property market. So we've talked a lot about interest rates in the OCR in the previous episode. Obviously, have a direct correlation to the property market. What are your thoughts over the next? Maybe let's go 18 months. What's going to happen over the next 18 months to New Zealand in terms of property? And then maybe, if there's a couple of regions you think are particularly interesting.
Yeah, so, I mean, our call is that interest rates are falling this year and they will fall quite sharply next year. So that, you plug that into our model and you start seeing the housing market recovering over next year. And, house prices on our guesstimates should be 5-7% higher the end of next year. So that's quite a turnaround from the correction we've been through, where house prices fell 20% in some areas. So it's a necessary correction, and then I think we're returning to something a bit more normal. Now, through that, you will get some interesting developments. Investors are sidelined. Investors have been hunted by the government.
It's not a bad way of putting it.
And they've also been hunted by the Reserve Bank.
Yeah.
Right? They were the bad agents.
Yeah.
And they did precisely what I think you shouldn't have done in targeting investors, because they're the ones that can really move the needle on supply. And we've got a shortage of supply. But hey, it was, extending this bright line test, removing interest deductibility, slapping on this triple CFA, which is a swear word in banking, all these things, and then also LVR restrictions from the Reserve Bank targeted on investors the most. They really wanted to make sure there was no speculation, or at least, and there wasn't. Anyway, here we are unwinding a lot of this stuff, which is great. And investors, I think, will look at a market which has been through a correction. So maybe an investment that cost $2 million 2 years ago might be coming in at 1.5 now. So that's okay. That's a little bit more interesting just in itself. But the rent has gone up 5% in the last year. Okay, my rental yield, all my numbers in this investment suddenly look better. And whatever renovation I need to do, I'll probably get a builder where I couldn't 2 years ago. Good luck.
Yeah. Oh, yeah.
So there's a lot of things pointing in the right direction.
Yeah.
And then you talk about the population growth that we've had. Absolutely astounding. It's amazing the population growth we've had in the last year. Have we built the houses for these people? No, that's not the Kiwi way. We'll just get the shortage and make it worse.
Yeah.
So I think from an investment point of view, have a look.
Yeah.
Yeah. Do you worry about it being a much bigger increase in house prices? And the reason I ask that is so 5 to 7, I go, yep, I can see that. But I also go, there is a lot of people who have intended to move for a period of time. Maybe they want to downsize. Maybe they want to, their house is too small and they want to move. Maybe they've spent some money on their home, they've renovated it, but they need to get their costs back. So there's some pent-up movement around people wanting to move. Interest rates coming down, but then, like you've said, we're not building any houses. We've had all of these people coming to New Zealand. Do you worry we could end up in a place which is, I know people go, house prices going up a lot is good, but actually quite bad, where house prices jump too much too quickly?
So, James, before we continue, I have got a special announcement.
Have you started sticking to your budget?
Absolutely not.
You finally made it as an after-hours DJ.
I wish. Mate, the thing is, we have got a brand new podcast partner, Partners Life.
You mean the award-winning insurance provider with over 300,000 Kiwis insured?
Yep, they're also a New Zealand-operated company, and they are passionate about increasing financial literacy amongst Kiwis.
Sounds like a great match. Where can I learn more about them?
Check out their website in our show notes below.
Really thought DJ Magic Mike was going to be a global sensation for a second.
Yes, I do. I do worry about that. And it's the affordability issue, and it'll become an election issue again if that happens. So if we're sitting here, a year and a half's time or whatever, and you're looking at the latest Rhines data, and Auckland house prices are up 15%, Wellington's up 10%. The regions are at that sort of a level. We're all going to start saying, well, the affordability of housing in New Zealand's just gotten worse again.
Yeah.
That's not what we want. What we want is a response in the supply of housing in this country. We need to increase, at least 100,000 homes to tackle the shortage that we currently have, let alone what we're going to grow into.
Yeah.
Right? We need 100,000 homes now. We can do it. Right? You can use prefabricated homes. There are ways of doing this. But I do really worry that we are going to wake up. House prices have taken off again. People who aren't on the ladder, it's just unaffordable.
Get frozen out for a little bit longer.
Frozen out for longer. I mean, the good news recently is that you can actually say, hand on heart, the property market has become a bit more affordable.
Yeah.
For the wrong reasons, but it's got more affordable. We want it to get more affordable for the right reasons, and that is that we've actually supplied.
Yeah, instead of the
cheap,
demand side. Yeah.
Cheap. It's all the supply side.
Yeah.
The demand side is what we always talk about, but it's all the New Zealand's problems on housing, supply.
Yeah. And then you kind of, just to jump back slightly there, we were talking about, the theme. You said, look, investors are going to come back. And you kind of talked about that in a positive light, like property investors are good for the economy in a way. Now, I know we're sitting under a giant neon sign that says need money for property, so I may be considered to be slightly biased. But, sometimes we will do podcasts on property investments, and we're not immune to reading the comments. We read the comments and we get, a lot of people coming at us like, this is bad for the economy. You guys are just taking advantage of people. How dare you raise rents and these sorts of things. It'd be great just to get your insight as to why you think some level of property investment in the economy, on the housing market, is good, and how that kind of plays out. Because, we cop a bit of heat for, saying investors should be in there. Yeah.
Yeah. I'm saying that, investors have been deliberately pushed out over the last few years. I can send you some charts, on the amount of loans that the industry was doing, a few years ago for investors and what they're doing today. It's just dropped off a cliff. And we're even lending more to first home buyers, which is great.
Yeah.
Fantastic. Like that.
Yep.
I don't like the drop in investors.
Yeah.
Right? We don't need that. We need that to go the other way.
Why?
Why do we need that to go the other way? Because some people will rent.
Mm.
So we need to provide healthy, affordable rental property, right? And that is the investor.
Yeah.
And the problem with our housing market is quite simply we don't have enough affordable homes. We're actually not too bad at building McMansions and that sort of stuff.
Yeah.
Not too good at building a $500,000 place.
Yeah. And I find that really interesting because it's, when we are talking about investors in the property market, and obviously we're very pro property and pro people taking action to grow their wealth, and property is a great thing to do that in New Zealand over the long term. Sometimes it comes across like we're just, stuff everyone and go buy a whole lot of houses, when actually, there are stages in your life where you don't have the ability to buy a house. You're young, you've just left school, you just left college, you've just moved into the country. Lord forbid you've just come from South Africa and thrown away 90% of your money because you've had to exchange it from the rand to the dollar. And they do perform a function in the economy, which is actually needed. So yeah, really interesting. I find that really interesting just to hear a take on why they're needed and that they're not the devil. Yeah.
Yeah. And I mean, but there's also the link. A lot of businesses, in order to become businesses, need loans and use their house, to get the cheapest rate. So there's also a direct link to a lot of small, medium-sized businesses as well. That asset, can really be a fire starter.
And I don't even know if I can say this on camera, but sometimes when someone comes to us and says, hey, I'm a plumber and I want to go be my own plumber and I'm going to need some money to go get the tools. How do I fund this? What business loans can we look at? Some brokers out there might say, maybe you should get the overdraft first and then go do the plumbing and then go do the buy the tools and do that sort of thing. Because again, for small businesses, the majority of that funding is linked to the house. Yeah.
Yeah. You do wonder whether, I do agree property investors have their place, but the Kiwi way, right, is to invest into property. But if we had a different way, or if property prices became more stable and grew at a more stable number, what would the impact be on New Zealand if we invested much more into business and productive assets?
That's where we fall short.
Yeah.
And that's where we fall short in a big way. Like access to capital markets for, almost that next stage business.
Yeah.
That more the M.
Yeah.
In
they've got out of the swamp.
Yeah.
And they're just,
and they're growing, but they need that next leg higher, and they almost outgrow their banks.
Yeah.
And they need direct investment. So the corporate market here is just tiny.
Yeah.
It's just really there's been a few trend setters and ones that have broken ground, but
they're an anomaly. Yeah.
It's not like other markets,
Yeah.
like where you can just get access to capital.
Yeah, because if you're a decent company in New Zealand, you probably go list in Australia,
ASX.
right?
Yeah,
So many of them
absolutely.
do.
And
So many do.
And that's just not the right thing at all. So at its core, though, is the problem with that we don't have those large institutions being listed on the NZX because of almost the banking system being so heavily focused on the property side, and us as Kiwis going, the way to grow wealth, the way to get leverage is so focused on property.
Surely it's probably more to I would view that the same way that I viewed cryptocurrency at the start of it, right? When it's just a security with some tax advantages. Surely the New Zealand's focus on property, I understand it's tangible, I understand you can live in it, I get all that stuff.
Touch it.
Is just 2 years and then you're outside of Brightline. You know what I mean? Like the tax advantages for property versus investing in shares in a business. Wow,
Yeah.
It's massive. And
Yeah.
It's the amount of leverage that you can get for a ridiculously cheap price.
Yeah.
Like the leverage that you can get into a home is staggering. You can't get leverage like that into a stock market.
Nah.
You can't get leverage like that into other assets.
Yeah.
And we know how you're going to pay us back.
Yeah.
Given everyone else before you. So we know that you're very, very unlikely to default. So we can actually give you an interest rate which is far better than anything you see outside of it. And you can have that for 30 years. And you know, I keep saying, you know, you put $200,000 down, you buy $1 million property, it goes up 200,000. What percentage increase have you gained?
Yeah.
A lot of people say 20%.
It's 100.
No, it's 100.
I want to jump back and talk to you a little bit around. So we're talking, we're not building enough houses. Government, Chris Bishop has said we've got this plan to release all of this land. Councils have turned around and go, we don't have the infrastructure for this plan. I'd be keen to get your general thoughts on all of that's been happening.
Yeah, look, I do applaud the direction and the discussion, and you know, we need to increase supply. People get it. The ability to deliver, and when you start seeing, oh look, I actually can't do this, or we're not going to be able to do this. That's the sad. Yeah. That's the sad part. I mean, it's go back to the other government. You know, they came out and they said, we want to do a Kiwi build thing. We want to build 100,000 homes. You know, tick, 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 and what they ended up building, like 5.
Yeah.
The idea was great, but the execution's super tough, and that's what worries me. We know what needs to be done. It's the execution.
So do you have any hope for execution?
I do. I'm forever hopeful that we'll get things done.
But not blindly optimistic. Like you think actually we can do it.
Look, I think history repeats a little too much here.
What do you think is a healthy level of like capital gains per annum on average over the long term? Like we talk about getting scared of property prices jumping too much, but some growth in property is obviously a good thing. Is it moving at like the wage rate? Is that like a healthy place, or where's a healthy place for capital gains?
Yeah, that's a really interesting question. I think you got to consider the risk and everything that you're doing. Health for various different things is going to be a very different answer. But you know, anything 5 to 7 to me would feel about right.
Yeah,
but you're gonna get some, you know, investments which are just a lot higher because they're so much harder and there's so much more risk involved. And then you'll get others that are a lot lower because they're not that risky. It might just be a house in Remuera. Well, how risky is that?
So when I come back to the migration numbers, so 140,000 people moved to New Zealand. What do you think is going to happen moving forward? Because it's a bit of a blend, right? Like you want people coming to the country, but if you have too many people coming to the country, then everybody turns and goes, we've got too many people in. What do you think is going to happen in the migration space?
Yeah, so that net number that we all quote of 140, what does that really mean? Well, we've actually brought in, you know, hundreds of thousands of migrants. We've lost some migrants, and then we've lost a net 50-odd thousand Kiwis. So there is a lot going on within that. Within that massive group of migrants who have come here, they seem to have taken the jobs that were vacant, which is great. Although I'm starting to hear from businesses that they're getting a bit desperate. So they almost came here a year too late. So they've come here, and now a number of them aren't getting the jobs that maybe they thought they would get. So an example, I spoke to a CEO of a company, and he was looking for an engineer, and he got 55 responses, and he was like blown away, going 55 for, you know, that's amazing. Only 10 of them were qualified. So he had 45, and he said they were all migrants.
Yeah.
And he said they're searching for any job, and they're just almost sounding quite desperate. Yeah. So why I brought this up is it's like, well, okay, we've had this massive surge of people coming here, but what if they don't get the jobs?
Yeah.
What if the job's gone? What if the business confidence, which has been shattered in the last year, no longer hiring? We might actually see a bit of an outflow. And so I'm going to keep an eye out if we start seeing signs of that. And, you know, to your point about Kiwis going to Australia, well, I think the attractions, you know, that's going to stay there.
Yeah.
That's not going anywhere. So it'll be interesting to see how fast that heads the other way.
So are you alluding that there's the possibility that we could see negative migration?
I wouldn't go that far. We've got negative migration on Kiwis, and that's kind of the Kiwi way.
Yep.
It's just quite bad right now. Negative inflation in total, probably not, but not the 140 that we've got. Maybe it trickles back to we sort of think the longer term, more natural rates probably around 30 to 40.
Yep. Right. Okay. And what are your thoughts around rents? So, because obviously you think all these
Well,
people
it
are coming.
feeds into it straight away, and it's one of the first things that moved. So of all the indicators we've been looking at going, migrants are here. Are they buying houses? No, they're actually quite young. Are they buying cars? No, young again. Their inflationary impulse is quite low. All right, that's kind of cool. What are they doing? They're having to rent. Okay, what are they renting? Well, they're probably renting a room in some cases, or they're renting a whole house. What have we seen move? Of all the indicators, rent straight away.
Yeah.
And it's up 4.8%. You go, okay, that doesn't sound too bad. Well, actually, that's the highest in the series that goes back to the 90s. That's the most we've seen rent rise in 1 year.
Yeah.
I want to change the topic, Jarrod. I want to move on to the NZX. So we did talk about it a little bit before in terms of successful companies, if there are any in New Zealand, tend to potentially go list somewhere else. My question to you is, so I'm an investment advisor. I look at the US stock market and it's just gone absolutely bonkers. I'm showing my clients, this is not advertising to go come invest with us. This is just a 1 year period, but like 10, 15% returns over 12 months. And the portfolio is broken into two sections. It's the US stocks that have just gone crazy. New Zealand has done 0%, and then it did negative, and then it did 0. But I mean, if you backtrack all the way to maybe like 2016, 2015, 2017, somewhere around there, like New Zealand was quite an attractive market, and the NZX was performing really well. And that probably comes back to business confidence and us being in a place where we're not just dependent on property, but we're doing other things. My question to you is, how do we get back to that point where the NZX 50 is performing really well, that we do have really strong businesses in New Zealand that do want to list?
Yeah, I think, I don't know the answer to it, but I do think enticing, if that's the right word, more businesses onto the NZX could only be a good thing. I really like the sharesies and these sorts of things, which has made investing cheap. You can put $10 on a stock. You can teach your kids to buy a stock. I think all of this is going to help going forward because New Zealand and Australians, New Zealanders and Australians, we don't invest a lot in the stock market. And when you look at household wealth, it's like this massive wedge as a house if you own it, and then you got like these tiny little things off the side. Whereas if you go into the United States, there's a proper wedge that goes into the stock market, right? They love it. They love it over there. They talk about stocks more than anything. We talk about housing more than anything. So it's just a bit of different culture, but I do think we do need to entice more people into that asset class, investment class. Now, why have we underperformed the way we have? I think it's just relative economics. It really is. We've been through 18 months of a bad period, right? Recession for 18 months and continuing. Our stock market reflects that. US economic performance has been much better than ours. You've also had, I think, quite a bit of money being poured into sort of AI tech type stuff, which has really got people excited, and that happens, and that's something that we don't have in New Zealand. So sure, that's attracting a lot of money there, but I think I would just say broadly, New Zealand's economy, it's underperformed.
Yeah.
Okay, I've got an interesting one to finish on. So obviously, we've gone through a period where inflation has been really high. What have we done to fix that over a period of time? Monetary policy, right? We've made the OCR really high, which has made home lending rates really high. my boy Mike, I don't know if you want to grant somebody with, give kudos to somebody for the idea, came to me with an idea to think, because it does seem very one-dimensional, right? Like we've got this one thing that we feel good or we feel bad depending on how we use it. But you mentioned another idea to me the other day, which I thought was really interesting.
Yeah, it was around, instead of using the official cash rate to either take money out of people's pockets or put money back into people's pockets, was using compulsory level of KiwiSaver or superannuation contributions to the same effect, right? So, if you want people to spend more effectively, you can lower their superannuation contribution, and likewise, you can increase it again. My thought behind that was, instead of the money going to no one or the banks or the government with the official cash rate, you're effectively just saying, we're going to take this away from you now, but when you retire, you'll have a larger pot of money, right? So you get the upfront kind of, you get the upfront benefit, which is what you're trying to do, take money out of people's pockets or put it back in. But it's more productive in the fact that you are increasing the pot of savings that they have for retirement. So that was my thought. Yeah.
What do you think?
Yeah, I mean,
if it's good, you can steal it. If it's crap, it was James's idea.
Leave it here.
Yeah.
Well, I'd just say, I mean, you say when interest rates go up, it goes to no one or the banks or the government. It does actually go to someone. So when interest rates go higher, the savers are the ones that live on it, right? And you wouldn't have heard it, but we did. We heard them screaming in agony when the cash rate dropped to near zero, right? They were in a lot of pain. Their term deposit rates went below 1, so they hurt, right? Now they're obviously in a much better position, getting 6% on their term deposit rate. So we're kind of doing this.
Yeah.
But what you're talking about is almost just doing it for yourself over your life, and having someone come to you and say, well, at the moment we want you to spend less and put more away. Oh, now things are bad. We want you to, put less away for your retirement and spend more. Yeah. For me, I mean, I think it's a good idea. I think it's an interesting idea to discuss. But I guess my initial reaction is, my view on this is that we don't save enough.
Yeah.
Full stop. And it's too easy to get your money out of it. I like the Australian super, where you are told compulsorily you're in. And when I got my first job in Australia, they told me my pay, and I went, that's fantastic, I'll take that. And I didn't have to make a decision like you do here. Do I put 2% in? Do I 0.4?
Yeah.
Are they matching? This is all garbage. It was just 9%.
Yeah.
And they thought that was too low. Now it's 12 over there. They have the 5th largest sovereign wealth fund on the planet.
Yeah.
It is amazing what they've done. We're building that here, and I want it on steroids.
Yeah.
I want it compulsory, and I want it 10%.
Yeah.
And I don't want people to have to make a decision.
Yeah. Yeah. And the access as well.
Access
the government
is too easy.
we're talking about accessing it for bonds and this and that and the other.
Yeah.
It's got to be locked away. My reason why I was thinking, I do understand the point where it does go to the savers. Maybe if the boomers would just sell a house, their term deposits wouldn't be so bad.
Yeah. And you do want when you do want people to spend money, right? You do want cash to be unappealing, because you want people to deploy their capital into the economy. Because we do know money shouldn't be sitting in the cash if it's for the long term.
Yep.
Okay.
But it is interesting. Like, the more I think about it on the spot, you can adjust, like, everyone who's working almost immediately, right?
Yeah. And it makes your country wealthier, and opposed to the OCR where you've got fixed rates, where there's a lag, you have a much more immediate.
And I don't think it has to be one or the other. You know what I mean? But a combination of two things, as opposed to just making something worse for the economy. I get that, like, 4 people who have a term deposit now have a bit more money in their account. But, it just, for me, it seems like another tool that would be a little bit more of a, you could implement it quicker and you could pull it back quicker, as opposed to just, and like you sort of said, 18 months from now, that's when we're going to see the real impact of some official cash rate drops once they start dropping and everyone rolls off.
Yeah. And I do agree, though, that you could do them combined, right? Compulsory KiwiSaver contributions at a far higher level is
and then go up and down.
and then go up and down
Yeah,
is
yeah.
good. Because I tell you what, Jarrod, if you want to see something depressing, TV1 did something on poverty and retirement. And because it's not there's a lot of people that are going to be fine in retirement. It's those that, are just on very average incomes or below average incomes. And then, when it comes to retirement, they're, skipping meals, they're not putting the heater on, all those kind of things. And you can fix that, not for them, but you can fix it for their grandchildren.
Yeah.
Okay.
Cool.
So something for you to ponder, Jarrod. Feel free to take the idea. Once again, I'm really grateful on the inflation day that you've come out and had a chat to us. So thank you very much for your time.
It's always fun. And
we'll do it again next quarter. Thank you very much to Partners Life for sponsoring the episode. Please make sure to subscribe, review, and like, and we'll catch you next time.
Cheers.